Well, let's move back to our northern neighbour, Zimbabwe, check in on those markets. And as they stand for the day, the mining index sitting at just over 80.46. And looking at that industrial index, sitting at 186.6, slightly softer, down by 1/5%. Well, let's delve into some of the factors in Zimbabwe this week. We've got inflation reweighting there, new CPI weights like we've had in South Africa. We'll delve into this and more with James Wadi, Group Economist at BancABC. James, thanks for your time today. So looking at the inflation figures and the new CPI weights, talk us through the expectations when it comes to the changes it might have to the overall inflation number. And that, of course, that inflation print with the new weights coming in for January.
Yes, true. The authorities revised this new CPI basket. As you may know, our old CPI was kind of no longer a reflection of the consumption pattern for the general public. So this triggered the revision, which is normal, as we constantly have to revise in order to keep up pace with the changing consumer patterns. So with regards to the changes that were brought by the authorities, food inflation, food items, we saw an upward revision of food weight from 31.9% to about 33.5%. So I think food is still a dominant item in the CPI basket, which is typical of most African markets. The second largest item in the consumer basket is housing, water, and electricity, which now accounts for about 17.7%. This is from the past 16.2%. So we have seen quite a number of items in the CPI basket being revised upwards with one or two revised downwards in order to reflect the current expenditure patterns. Mm-hmm. And inflation, on the inflation front, true inflation for January came off from 2.9% in December to 2.5% in January. I think we have witnessed kind of containment of inflation pressures, largely because of weak demand. We haven't seen quite activity on that front.
Let's turn to one of the key export generating sectors. You've got the tobacco selling season commencing. It commenced last week. And you're looking at, in fact, growers this time around of 65,000. That's almost double the growers in the previous season. So what are the expectations when it comes to output from the tobacco sector and the type of prices that growers in Zimbabwe might fetch?
Yes, true. I think there are two issues here, why there's so much excitement with regards to tobacco. Mostly because a lot of farmers have tended to shift away from maize to tobacco because of efficient payment system with respect to tobacco. And as well, when you look at the favorable prices that prevailed last season, most of the farmers have found it attractive to venture into tobacco. So the doubling of number of growers from last year to this year is a reflection of that excitement. Mm-hmm. Expectations are that maybe we could surpass. Last year we sold about 144 million kgs, and there's a chance that maybe because of more people growing tobacco, we could surpass that level of tobacco that we sold at the auction floor.
Mm-hmm. But looking at the average crop selling price coming in for last week, sitting at $3.27, that's versus last season's average of $3.58. So you are seeing prices under pressure. I mean, is that a concern? Is that going to offset the increase in output?
There's a chance that the prices, in fact, the anticipation is that possibly the prices this year could be better than last year. Simply because when you look at the global dynamics, it points to huge undersupply of flavored quality tobacco on the global market. Yeah. And underpinned by that, the expectations are that it will support favorable prices this year.
Well, hopefully that is the case, but the first marketing week showing softness in those prices. Looking at the banking sector, we've also got some figures coming through from the Reserve Bank of Zimbabwe. You've got deposits which have risen by $850 million to $4 billion at the end of December. That is an encouraging sign, a sign of confidence in the banking sector. Is that how you're reading that?
Partly it's a reflection of the increasingly important role by the banking sector in terms of intermediation in the economy. But what is coming through is that some of the banks, because of the liquidity situation, they are kind of slowed down in terms of lending. And one of the issues that we were looking at is to look at the external lines of credit. When we look at the external lines of credit, according to the statistics, it seems like the appetite to take the lines of credit is not significant. It's simply because of the stringent conditions that often come with the lines of credit. Mm-hmm. So I think we are sort of in a difficult situation because we would have wanted to borrow from external lines of credit, but the tight conditions that come with the lines of credit have made it difficult for business to take those.
Yeah, and of course that has broader repercussions when it comes to growth in the economy. James, thanks for your time today. That was James Wadi, Group Economist at BancABC.